Good morning, hello and welcome to Moneycontrol's live stream. You're watching Opening Bell with me, Lavisha Darad. Well, it's a brand new day, and after yesterday's sixth day of sell-off, the GIFT Nifty is hinting at another negative start for the Indian markets as FI sell-off extends to the sixth straight day as well. But we'll be watching out how the day develops as well. The pre-open rates are also hinting at a flat to negative start for the Indian markets. We have had a negative global handover as well. Wall Street ended on negatively overnight as Treasury bond yields rose the highest level since August. Asia Pacific markets, that is interesting because Chinese markets, they sharply rose by 11% after a week-long holiday. Rest, Japan, South Korea, Australia, they were all largely tepid in trade as well. But we'll be watching out on how the market texture unfolds during the day. Plenty lined up in the show. Don't forget, we will be taking up your stock-related queries with our technical expert and understand how they look on the charts as well. So keep posting your queries in our live feed and we will try to address them before 9. But on that note, let's quickly get on board with our technical expert of the show, Ajit Mishra of Religare Broking. Ajit, good morning. So good to have you on the show.
Yeah, good morning, Lavisha. Same here.
Ajit, as I was talking about, FIIs, they have been net sellers so far this month as well. So how much of a downside can Nifty see from here on? Yesterday also it broke below the 24,750 support levels in the intraday deals as well. What are the new levels that we're eyeing for now?
Right. So, Lavisha, if you see the market performance, in the recent month, in fact, for the entire year, if you see that we were most of the time we were seeing more of time-wise correction in the market, but this time around we are seeing some serious price-wise correction. Means still, why would I say serious? Because earlier we were not, in fact, witnessing this kind of a dip, which is 5.5% kind of a decline that we have seen in the index so far from the record highs. And earlier it was very tight range consolidation that we used to see. And another important aspect that earlier we used to see that mid cap and small cap, they were the one which were used to face the heat more. But this time around is the other way around. That index heavyweights, they are facing the heat, of course, and that is reflecting in the FI selling data which you just shared, that 50,000 crores they have already sold in this month so far. So keeping this scenario in mind, plus technically we have seen multiple changes in the structure from the short-term point of view, that we have slipped below the short-term averages, which was placed around 25,550. Then we had a trendline support around 25,350, which we decisively breached in the same day. And now, despite the oversold position, we are not seeing any sign of decisive recovery. Yesterday, the previous swing low closed around 24,750. We have penetrated intraday, but on the closing basis, we somehow could manage to end marginally above the same. So my observation is that we are likely to see further pain in the market until we decisively reclaim 25,550. So one should maintain, sideways to negative bias. If we talk about intraday, positionally, it's a negative bias clearly. The next major support comes around 100 EMA, which is placed around 24,350. So as of now, most of the sectors or heavyweights, they are also pointing towards the same. One silver lining that we have is that we are still not seeing any major correction in the global market. But still, since we are not taking any clues from that as of now, and the heavyweights, yes, they are very closer to their major supports. So be it Reliance, SDFC, ICICI, which were down and out. So last week itself, Reliance was down nearly 9%. So close to around 2600, 2650 zone, we have multiple supports for Reliance. And similarly, for SDFC and ICICI, we are very closer to the major support zone. So that might result in some consolidation in the market. But for any meaningful recovery or reversal, we need to see, whether Nifty manages to cross 25,500 decisively or not.
Okay, 25,500 decisive breakout. They'll be watching out for Nifty 50. But Ajit, Bank Nifty, that slipped below 50,200 levels in yesterday's trade as well. So can we expect it to breach below the 50,000 levels? Because, as you rightly pointed out that we are seeing, the reversal trend is a bit difficult from here on.
True. In fact, if we see it on a longer time duration, the performance of banking index, we are very closer to the critical juncture wherein we are set to break down from the declining trend line of a rising channel. So that might result in more pain, and like what we are, seeing that FIs are, on the selling spree. So maybe close around 49, 300, 400, the next major support, which is the 200 days of exponential moving average, which indicates a long-term trend. That might be the area where banking index might take a breather. So around that area, obviously, one can see that HDFC and ICICI they might also reach closer to their monthly support zone area. So that might result in some consolidation. But before that, yes, there's a possibility that this pressure may extend.
Okay, some pressure that we will be seeing maybe in Bank Nifty index as well. But 49,300 levels that we will be watching out for Bank Nifty index as well. Just a couple of minutes, just a couple of seconds before we hit opening bell. And yes, the first rates right popping on your screen as well. Nifty flat in trade, up about 0.1%. It is above that 24,800 levels for Nifty 50 index as well. Sensex, however, Sensex is also showing signs of recovery. It is up about 0.2% above the 81,200 levels as well. What we are seeing among the sectoral indices seem to be doing well is your Nifty Bank Index. Bank Index is about 0.5% up. Otherwise, most of them, trying to participate positively in the trade. Nifty Auto Index, that is down 0.2%. Nifty Metal Index, once again extending the losses to the fourth straight day as well. It is down about 1% in trade as well. PSU Bank, that is holding up well. It is up about 0.3% in trade as well. India Wix is still above that 15 levels. It has cooled off a little bit from yesterday. It is down about 0.4%, but still above that 15 levels as well. Broader markets, if we look at it, we can see the sell-off continuing to the fourth straight day as well. Both mid-cap and small-cap indices down about 0.4% each as well. What seems to be doing well on the Nifty 50 charts is HDFC Bank. It is up, a percent in trade. Apart from that, we can see HUL, M&M, Cipla, Shriram Finance, Trent, all of them holding well in the Nifty 50 top 50 list as well. What seems not to be doing well on the Nifty 50 charts is the likes of Tata Steel, Hindalco, JSW Steel as well. So most of the metal names, they are seeing a bit of a profit booking in today's trading session, and they are dominating some of the Nifty 50 laggards list as well. The other list that comprises of is Tata Motors and Power Grid as well. They are also down up to 2% in trade as well. But since we talked about Bank Nifty as well, HDFC Bank, it is one of the index heavyweights, and yesterday it also remained one of the major contributors to Nifty fall. Today is, however, it is holding up well on the charts. Yesterday the news came out saying that the private lender is divesting its complete stake in HDFC Education to Vama Sundari Investments for 192 crore rupees. Vama Sundari Investments, that is a related party of HDFC Asset Management Company. Hence, the sale of shares to Vama Sundari would be a related party transaction for the bank. But Ajit, on the charts, how does HDFC Bank stack up, since it has been one of the major contributors for Nifty 50, up move or even the down move as well?
True, Lavisha. In fact, when we reached closer to 1800 mark, that was the area basically where SDFC has the last, 52-week high or record high, but it couldn't surpass that. And since then, we have been seeing a gradual drift. That it has completely engulfed the entire gains that the stock had witnessed in the recent months. So now again we are closer to the support zone. So close to around, let's say, 1590, 1600 zone is something that we have multiple support area. So again, there is a possibility that we might see some consolidation around that zone before making any meaningful up move. So short term, it might continue to hover in a range is something that what the indications are, and that is what Bank Nifty is also indicating. So it's largely that be it ICICI, SDFC or Axis, they are likely to remain in the range. But the good part is that we are very closer to the major support areas.
Okay, so major support areas that we're nearing for HDFC Bank. Ajit, Nifty IT Index, that did well yesterday in yesterday's trading session. So can we expect some further upside given Q2 results are also around the corner as well?
So, Lavisha, this is something which is very important and critical because three sectors which were holding strong till Friday was IT, pharma, and metals. Uh, since yesterday, we have started seeing some profit taking and decline in metals counters, but IT is still holding strong, and pharma is selectively we are seeing participation. So it's important that if Nifty has to see any meaningful recovery and sustain the level of 24,750, then IT should outperform. And as of now, indications are in the favor that yes, the IT majors, especially Infosys, TCS, HCL Tech, uh, they are almost done with the consolidation and they are still holding around the record highs, especially HCL Tech and Infosys. So this probably may result in possible breakout post numbers. So it's definitely a good sign if before the earnings and when the markets are falling like 9 pence, if any sector or stocks outperform, that shows that there's anticipation that there'll be a positive surprises in the earning. So as of now, yes, one should stay put in the IT majors. Mid cap IT is something that are still vulnerable for volatile swings or decline. So for a time being now, it's prudent that one should stick with the IT majors, the top three names, and avoid the rest of the pack.
All right, avoid rest of the pack. But we will be watching out on how the IT stocks performing in the coming days, given that TCS will be starting off the earnings season on October 10. Most of the brokerages are also expecting Infosys to review its earnings revenue guidance for the upcoming fiscal year as well. But coming to the next stock in focus, Nykaa. In its September quarter update, Nykaa said that they see mid-teens growth in consolidated net revenue, while net sales value has grown in early teens as well. Nykaa said that they are witnessing a strong performance in its retail omni-channel business despite subdued fashion demand in the first half of the fiscal year. Ajit, Nykaa on the charts, the stock has been coming off its 52-week high that it hit in August as well. So can we expect some bullish momentum to continue from here on?
So yes, in fact, post the consolidation range breakout from 145 to 180 range, the stock moved up very sharply to 220. But eventually, we are again seeing that the entire gain is engulfed in the recent weeks, and now we are again closer to the support area. Good part is that we are not seeing any volumes. This indicates that sellers are exhausted now, and we are closer to the major support zone, which is placed around 180. So yes, there's a possibility that we might see a reversal or a rebound, a sharp rebound rather. So with stop at 180, one can continue to stay put. If you have any existing position, and you can in fact look for fresh longs also with 205 to 10 as a position target.
Okay. So we will be watching out on Nykaa's stock performance as well. Another stock in focus is Bharat Electronics. The company said that it has won total orders worth about 500 crore rupees since September 11, and the company has guided for another 25,000 crore rupees worth of order inflows in this fiscal year as well. Ajit, Bharat Electronics on the charts, it is off 8% in the past 5 trading session. We have seen that it has made a debut on the Nifty 50 pack as well. So should investors buy this dip?
So in fact, Lavisha, that the entire PSU pack, be it the railways, defense, PSU banks, they were all witnessing gradual decline, and still there is no sign of reversal yet. Yes, intermediate rebound and recovery may happen due to the oversold position. So for BEL also, I'm seeing that the stock might continue to, though it's comparatively, performing better if we compare with the other PSU's name, because it has retraced or roughly around, 30-40% from the record highs, but others are down already like 50-60%. So comparatively, we are seeing better performance, but since we still have more legs to the current down move, until we close and sustain about 280 mark, one should refrain from any trading position in BEL for the long side. And positionally, the stock might inch toward 250 area in days or weeks to come. So if you have any existing position, you should maintain a stop at 260 and use any recovery towards 280-85 zone to reduce your trades.
Right, 260 level and 280 levels. We will be watching out for BEL. Let's straight dive into the viewer queries as well. The first query coming in from Satya, he's asking, please ask the charts for CAMS for making a fresh entry for say about 1 to 2 years. CAMS, Ajit, it hit a 52-week high in the month of July, but ever since that, the stock hasn't really performed well as well on the charts. Can we see a breakout in the next upcoming sessions for CAMS?
In fact, it's comparatively better to what we were seeing in the other, stocks in the mid cap and small cap space. The stock was hovering in a very tight range around the record highs. But yes, of late, there's an indication that this consolidation may extend because the breakout attempt failed and now we are seeing profit taking. But still, the way volumes have dried up, that indicates again like weak hands basically leaving the stock. So yes, you can continue to stay put. If you are planning for any momentum trade in the stock, then you should wait for a breakout above 4600 mark. Otherwise, it might hover in this band of 4000 to 4600 at least in the near future. But if you're okay holding this stock, let's say for 3 to 6 months, then you can start accumulating from the current levels with 3800 being the stop loss. And once we break 4600, then there'll be a fresh momentum towards 54,600. So yes, the stock looks positive overall. You can continue to accumulate on dips.
Okay, so accumulate on dips, that is the call coming in. Another query coming in from Shrikant Chavan. He's asking advice on Bharat Dynamics. He has bought the stock at the levels of 912 rupees. He's asking if he should hold the stock or sell and book profits. Currently, Bharat Dynamics, it is trading about 1000 levels, odd levels, Ajit. But in the past 1 month, the defense flavor has been, fizzled out. What can we expect in the near term?
Exactly, Lavisha. So, in fact, this gentleman has bought it at very lower levels, and then he saw a high around 1800 mark, and then now he's okay selling it marginal gains. That is what we always try to explain to our clients also, that when we see any extraordinary move in any extraordinary sector or themes, there's no harm booking at least partial profit, after a certain threshold, let's say 20%, 30% kind of a gains. Now, since most of the, defense related counter, they seems exhausted, means the selling have, seems like, there's negligible selling at current levels. So we may see some consolidation and followed by a rebound. Since you have bought it at lower levels, I would rather recommend you to maintain this position now. For the possible target of around 1200, 1250 with stop loss at 1070 on the closing basis.
Okay, so hold position and a target of 1200 odd levels coming in for the stock. But another stock that is query coming in is from Patrick. He's asking the view on Indian hotels. Indian hotels, Ajit, so far this year the stock has been given a very decent return. It has underperformed benchmarks as well. Can we expect a further upside from the current levels for Indian hotels?
So yes, it has performed exceptionally well, and this time around also, what the correction that we are seeing, the momentum is missing. So it's a good part, and we are closer to the support zone also. So close to around the 640, 630 area, we have multiple support plays. So if you are okay with slightly deeper stop losses, 630, then you can continue to stay put. Once we break 675, that there will be a fresh leg of up move in the stock. So yes, you can maintain your longs with 630 being the stop, and for the positional target of 720 again.
Okay, 720 coming in for Indian hotels as well as a target. Raj is asking his advice on NBCC. NBCC stock on the charts, Ajit, so far this year it has given a stellar performance, but from the past month it is seeing a bit of a consolidation. Can we expect a further upside and ignore the consolidation that is coming in for the stock?
So yes, as of now, we have not seen any major damage to the price structure, but post bonus, yes, we are seeing some sort of profit taking intensifying. So from the trading point of view, I would be very strict with my stop losses because we are still closer to the record highs and we have room on the downside in case if it corrects. So with stop loss at 108, I suggest maintaining the long position. Once we break that, then there's a possibility that the stock might retrace to 95 or 98 area. Upside, once we have a closing above 125, then there'll be a fresh leg of the up move, which can help this stock to inch toward 140 plus zone. So as of now, it's a hold with 108 as a stop loss.
Okay, so hold coming in for NACC. Another stock in focus is Shobha. Shobha has come out with its September quarter update. It is seeing a sequential drop in its total sales figures as well. Today, the stock is also down about 2% in trade as well. Ajit, on the charts, Shobha, did we see it did see a breakout from the September 11 onwards, but the past week it has been languishing in trade as well. So, what is the next levels that the stock can eye?
Right. So, in fact, in the entire realty space, if you see, Lavisha, that we are seeing profit taking, but again, in line with what we are seeing in the other sectors, we are very closer to the critical support in realty space as well. And for Shobha also, that the last consolidation range bottom is placed around 1600, 1620 zone. So we are very closer to that mark. So if you have any trading position, you can stay put with the 1600 being the stop. And in case of recovery, 1800, 1850 is going to be the area of resistance. So if the view is short term, then you can use that recovery to reduce your position. Likely, in all scenario, we may see the stock witnessing further profit taking if it fails to hold 1600. Then it could be a serious trouble for the stock because it moved almost vertically from 400 to 2100 mark. So, we have not seen any meaningful correction yet. So, below 1600, definitely you should exit.
All right. That is the view coming in for Shobha. One more query that is coming in from Hari Krishna Lenka. He is asking if Suzlon correction is the right time to buy the stock. Suzlon, Ajit, it has fell for 8th straight day. Today also the stock is down 1% in trade. There have been some concerns by the advisory, concerns by the BSE, and some corporate governance practices as well. But Suzlon, on the charts, do you expect a certain momentum to pick up in the near term?
So yes, today, after retesting the 100 EMA, we are seeing some respite. Means we are seeing recovery, though it's still down. So there's a possibility, the stock might inch towards 74, 75 area, but the tone looks sideways to negative to us. As of now, I would say that if you are planning any fresh trade, let it stabilize above 65, 66 decisively for a day or two. Then you can look for long position, not at the current levels.
All right, just one final query. Shatabdi Ghosh is asking her view on PC Jewelers. PC Jewelers, it is down in today's trading session as well. In the past 1 month, however, it has outperformed and it has given about 10% returns. Ajit, on the charts, what is the next level that we can eye for PC Jewelers?
Right. So, Lavisha, we always recommend that if you are chasing any stock which trades largely in circuit breakers, then you should be very strict with your stop losses. The stock moved up from 45 to 188 in just no time, and now we are seeing a decline also in circuit breakers. The next support comes around 130. So that should be your strict stop loss, and in case if it sees any bounce toward 155, 56 area also, then also you should liquidate.
All right. So, just one final question for you, Ajit. What are your trading picks at this hour? Because we are seeing quite a bit of a sell-off in the recent sessions. So, what can be a good buy at this point of time?
Yeah, so like Lavisha, we've discussed about IT is still holding strong. So I feel that among the IT majors, Infosys, which is consolidating closer to its record high, still shows strength. Though it's down nearly 1% today, so I feel it's a buying opportunity. So with stop at 1870, one can look for going long in Infosys with 2020, 2030 as a positional target. At the same time, one should maintain few shorts also because the market tone is negative. So we are seeing some bounce in REC, PFC today, but the trend has reversed post the consolidation range breakdown. So one can utilize this rebound to go short with stop loss at 525 and for the positional target of 460.
All right, REC and Infosys coming in. But thank you, Ajit. Thank you for taking out time, addressing the viewer queries and sharing your trading strategy. We hope that we connect with you soon as well.
Certainly. Thank you. Thank you so much, Rishi.
Okay. On that note, we have come to an end of this edition of the Opening Bell. But don't forget to tune in at 3:30 p.m. as we discuss how the session unfolded and which stocks moved the most. Until then, stay tuned to moneycontrol.com for all the news updates and market insights.